So y'all, Bob Jackson with the Sage Group. With me today is Melissa Butler from North Alabama Mortgage, giving her a proper introduction this time. One of my favorite lenders, great job for my customers, and honestly can't think of anybody that I'd prefer to have as an extension of my brand. So anyways, thanks for coming again.
Thanks for having me.
Absolutely. It's funny, I think you were wearing that last time.
I know, it's crazy. You're going to label me as an outfit repeater.
I remember that, Seinfeld. Do you have another dress? Anyways, today I want to talk about self-employed people. So, we're a gig economy, right? Everybody's got a side hustle. Sometimes that side hustle turns into like a full-time thing.
Yes.
And they turn out making some pretty good money and want to go buy a house. And oftentimes they're slightly disappointed when they call a lender. So talk to me about that. How does somebody that's self-employed go about getting a mortgage?
So in the mortgage world, we use the adjusted gross income. So after taxes are already taken out. So you may see yourself making $100,000, $200,000, but after you bought that car and wrote off all your marketing materials and maybe you bought a tractor, we use whatever's left over after that. So that works out in your favor when you are paying your taxes because your accountant did a really good job preparing those so that you didn't have to pay any taxes, which is all fun and games when you have a low tax bracket that you're in. But when you go to verify your employment, the only thing that we have to go off of is those tax returns. So it comes back to kind of bite you.
Yeah.
So in the mortgage world, we use an average of 2 years. If you have an increasing trend in your 2021, 2022s. At this point, you may even have your 2023s. And so we use both personal and business returns. We look at the average and the trend to see, do you have an increasing trend? If you do, you get them averaged. If you have a decreasing trend, we take the lesser, and you also have to provide a profit and loss that shows the health of your business. Now, if you're paying yourself a W-2, we can take that income out of that adjusted gross and use that as long as you have pay stubs to support that. And you may also have to provide a profit and loss too for that. In some circumstances, you are eligible to get a bank statement loan. And what that means is this is a perfect opportunity for somebody that has written off a ton of items on their tax returns, and all they can show is that their flow of money into their bank account. So you can provide 12 to 24 months of bank statements, and the underwriters can actually pull that money out, see how many debits and credits that you have listed in those accounts, and they can produce a monthly income. Now, that is a non-qualified loan, also known as a non-QM. And I'm not sure if you want me to get into non-QM or not.
Yeah. I mean, it sounds like a good way to do. I mean, especially for, I'm self-employed, right? I have a lot of expenses. Trust me, IRS, I have a lot of expenses.
So
tell me like what non-qualifying means and what that's going to mean for their rate and things like that.
So you have two different loans. You have non-QM, non-qualified mortgage, and qualified mortgage. And the more traditional route is the qualified mortgage. That's your standard FHA, USDA, VA, conventional type product. And then you have non-QM, which doesn't follow the same rules. So essentially, the investor that's funding the loan, they're willing to take on a certain risk. And they call this a non-QM. So it may be that they won't finance it for let's say, how do I put this? They won't finance like a mobile home during the normal traditional Fannie Mae, Freddie Mac products, but they will assess that risk depending on the person's credit score, how much money they have in the bank. They have different factors that weigh into a non-QM. So what that means though is that you're going to have a higher interest rate, you're going to have a higher down payment requirement, but if nobody else is able to finance this loan and this is the only option that you have, or if you wrote off everything on your tax returns, then you have to go this route. You can always refinance later if you did your tax returns differently or something like that, or now have a different pay structure, or now you're a W-2 employee or something along those lines. But non-QM is a good way to get yourself in the door if you have a fixer-upper home because they're not held to the same standard that normal mortgages are held to. Does that make sense?
Yeah, it makes total sense. I appreciate the thorough explanation on it.
Probably deeper than you wanted me to go.
No. We're all about thorough and transparency, so that's all good. I appreciate it. Tell people how they can get a hold of you.
So my phone number is 256-679-3638. I'm sure Bob will have it below, or however you link
I'll probably edit something in like right there.
here.
Yeah.
So you can call me, you can text me. I also have a loan application link that Bob will have that you can fill out your information, and I can reach out to you and get you the loan products that I think would work best for you. And if something's not going to work for you at this time, I'll steer you in the right direction to make sure that you are able to buy at some point. Maybe we'll take a look at your credit and see if there's any work we need to do or debts we need to pay down, what we need to do to get you in the right direction to buy a house.
Yep. So that we can go out and shop with confidence, right?
That's right.
Absolutely.
Gotta have that.
All right. Thanks again. Appreciate it.
Thanks for having me.
Yeah, absolutely.